Tomorrow is a big day for CPI news as both the UK and Canada will be releasing new CPI data. CPI numbers for the UK will release at 2 a.m. Eastern Time here in the US, and market analysts expect CPI to hit 10% month over month and core CPI at 6.4% year over year. 2 months ago, inflation in the UK hit double digits for the first time in 40 years. The CPI numbers are one of the biggest driving factors when it comes to the Bank of England's decision on interest rates next month. Many people expect a 75 basis point rate hike, with some expecting even a 100 point hike. Meanwhile, CPI reports for Canada will release at 8:30 a.m. Eastern Time in the US. Market analysts predict a move down to 6.8%. Here are some pairs to keep an eye out for heading into the news tonight and tomorrow. Are you trying to find a broker or feel like you need a better one? In the description below, you'll find the link to fill out our broker match form. After answering a few easy questions, our team will reach back out to you with a personalized broker recommendation. Try it for free in the description below. Alright guys, so here we are inside of the EdgeFinder. We're taking a look at GBP USD along with the upcoming GBP CPI news. We're going to get to GBP CAD in just a second. Remember, if you want the EdgeFinder for yourself, it is such a useful market scanning tool. You can find that in the link in the description below. You can actually request trial access for the EdgeFinder if you want to try it out before you buy. That will be down in the description below as well. But starting off GBP USD, we have a sell bias here, score of -5. COT data gives us a score of -2. COT data is right over here. Institutional trader data, of course. 78.57% long and 21.43% short. It's the year of the dollar. The dollar is incredibly hot. Institutional traders favoring it heavily. Pound 35.72% long and 64.28% short. Lots going on with the pound right now. CPI numbers should help curb this high inflation that we have here. I'll just go ahead and skip over to our little inflation metric, because that is kind of what we're talking about with CPI numbers. So we have scores of -1 here for the pound dollar pair, because pound inflation is so much higher than the dollars. I mean, the dollar has high inflation as well, 8.2%, but 9.9% for the pound. Hopefully these CPI numbers, if they come in good, can help curb some of that inflation. Let's get back on track and talk about retail sentiment right here. 49% long and 51% short retail wise. So no change from yesterday. And then we have our seasonality and trend reading. Trend reading -1, seasonality -1 as well. Here are the numbers for October. And historically speaking, we're seeing upward trends towards the end of the year. And then let's round out the fundamentals category with a +1 GDP growth, -1 interest rates, and a neutral unemployment score. We have the same unemployment here at 3.5%. However, GDP edging out USD for GDP growth, which is 0.2% compared to -0.6%. And interest rates, we have 2.25% for the pound and 3.25 for the dollar, giving us a +1 bias towards US dollar. That is just the difference between this number and this number. So that's a look at the pound compared to the dollar, but of course we're talking Canadian CPI numbers as well. So why don't we go ahead and look at Canada's numbers? We can do that. We're looking at GBP CAD. So of course we just looked at all of the pound numbers, but we can get some Canadian dollar numbers in here as well. This is a neutral bias, score of 0. This market really isn't favoring one currency or another. COT data 0 as well, because both of these pairs are heavily shorted by institutional traders. We just looked at the pound numbers. These are the same, but Canadian dollar, we're seeing 35.84% long and 64.16% short. So nearly identical here for the pairs, for the currencies. Retail sentiment, retail traders are long on the pair as a whole, 72% long compared to 28% short. Take a look at seasonality +1. We're actually trending upwards from last month, September to October. And historically speaking, we're seeing an upward trend moving into November as well. So we can keep an eye out for that. Trend reading gives this a +2, which is actually a good sign for the pair. That means that it's not moving down. I mean, of course, we've seen from September to October a pretty significant jump here in price, and we can actually look at the daily chart as well. So this goes all the way back to September 29th, and we can see where we are at today, October 18th. So I mean, absolutely upward from September. So even though it's not really favoring one position or another, going up or down at the moment, we have seen upward trends this month. GDP growth -1, inflation -1, unemployment +1, interest rates -1. So again, we've already gone over the pound numbers, so we'll just look at Canadian dollar really quickly. GDP growth 0.8%, unemployment 5.2%, interest rates 3.25%, and inflation 7%. So again, with the CPI numbers coming out early this morning, or tomorrow morning, for the pound, 2:30 a.m. Eastern time, or 2 a.m. Eastern time, I believe, and 8:30 Eastern time for the Canadian dollar CPI. We will see how these currencies are affected, how these pairs are affected. Will interest rates raise? Will they get lowered? We're going to have, I know the Bank of England is going to, is most likely potentially going to raise interest rates in November. That'll happen early in November. So we'll see what CPI numbers say about that, and potentially see a 75 or maybe even 100 basis point rate hikes early November coming out of the Bank of England. And we'll just have to wait and see what the Canadian government decides to do with that as well. Now let's turn it over to stream highlights featuring Trader Nick and Trader Jake.
We narrowly missed our idea there that we put on yesterday, 1.15, being that area of potential sell pressure for us. If we take a look at the daily chart, you can kind of see why. And I want to show you this here from a Bollinger just for a second. Topping up just barely outside of the overbought area. But looking at the technical chart for a second, what we can see here is that from a price action standpoint, we have tagged the area of resistance that we saw, that 1.15 being a key spot on this chart. Now, if you're a bull, you probably want to see this thing make a stab above this, right? You get a breakout, retest, continuation ideas. That's possibly a argument from a technical standpoint for bulls. But again, we maintain a bearish idea on this until something presents itself to the contrary. Now I'll show you guys the EdgeFinder here for the pound dollar, which continues to be overall a sell on the metrics that we scan regularly. So what the EdgeFinder does is it just, in case you're new to the streams, it pulls a bunch of different indications like the commitment of traders report. It takes retail sentiment, seasonality, trend, GDP, inflation, unemployment, interest rates. It takes all these things into account, and it punches out readings for each one of them based on the analysis present. So if we take a look, for example, at the commitment of traders data, very simply, we can see that in terms of the US dollar, smart money is very long on the dollar. If we take a look to the contrary to the pound, it's actually the opposite. They're very heavy on the short side. So if we take that into account, we say, okay, well, smart money, and this constitutes hedge funds and many small banks and speculators on the professional level in the commitment of traders report that we get once a week. What we see is that smart money, quote unquote, tends to be bearish on the pound and bullish on the dollar. So when we take that into account, we say, okay, well, that punches in a -2, right? because we get a positive for the dollar and a negative for the pound. That overall gets us a very strong sell reading on the pound USD. So coming into that, of course, the goal here would be to align as many things as we possibly can to give us a bias. And that's exactly what we get. Seasonality, the month of October is quite negative for the pair, at least historically speaking. We align all these things, and that helps us to formulate a better trading plan. Now, here's the thing, right? A lot of times people will only look at technical charts. And to me, this is my opinion, but I think you're kind of missing stuff if you only ever look at charts, because charts are great, but they may not tell you all the things that you need to know. We can know, just blatantly from looking at this, that in the last decade or so, where the pound tends to move in given months. We can see what the big players are doing. We can see what the little traders are doing, right? Retail sentiment is 50-50 on the pound. That doesn't give us much to work off of. But we can analyze all these different key metrics that play key roles in where the markets are headed next, and we can align them to our trading. This is why we've built the EdgeFinder. When I say we, I own a company. We build trading software tools for foreign exchange and futures traders.
We'll take a look at USD CAD, because I think if you are looking at that counter trend opportunity on the dollar, USD CAD is an interesting one to potentially capture it on, right? So if we take a look at this level here, what this was a significant kind of like trend point in the market where we came up, we made these highs, we rejected, we finally broke these highs, used it as support, and then this is the previous low that we put in before this massive rally. We made this massive rally that broke these highs. That was off of this low right here. We never actually fully retested that low until finally last night we actually did break through that low. So as we approach this level now, right, this would be an interesting level to look at for counter trend dollar opportunity. I think this is a better opportunity in my opinion, because the CAD is a little bit stronger than some of these other currencies like the AUD or the euro. So if we look at the CAD, if some CAD strength comes in along with some of that US dollar continued weakness for this week, maybe a break and retest opportunity here to take this all the way down to this level of demand down here would make a lot of sense. This is a clean range here. If we measure this out from this level to this level, we get about 150, 160 pips. So, the reward is there if you get the setup. These are the types of opportunities that I look for, where we have a clean range. We would have a significant trend breaking point in the market, breaking through these lows. We'd also have some fundamental stuff, potentially some CAD strength coming in if there's a hot CPI, and dollar clearly in a correction period right now. So that would all align to tell me that if you're looking at a counter trend opportunity, right? Remember, it's still a counter trend opportunity, but this would make sense from that perspective, something like that. So keep that in mind on USD CAD, right? But overall, we are still in an uptrend here. We did approach these highs and get some resistance. But if we just zoom in a little bit on this weekly chart, really since we made these lows, right, we've just been rallying very, very aggressively in favor of the dollar. So this could just be a correction period for USD CAD. We may see more downside on USD CAD, specifically zoomed in, right? If we break through these lows, get that retest, that's something that's going to be very interesting.
Make sure you guys check out the links in the description if you need broker recommendations, access to our free Discord, or want to chat with us on Telegram. If you're interested in our trading software, the EdgeFinder, you can find that in the description as well. Thanks for watching.